Well, the risk dial ended the week at -9, so in negative territory. And guess what? Once more, the weekly model has not gone into risk on, but stayed in risk off. Very surprising times, very surprising numbers. So we went from 28, which was a good score, to -31, then +15 on Thursday for the week, and finally we ended it up at -9, which is not good. If we have a look at the weekly model, we can actually see that we've gone from -1 to -3 on the difference between the moving averages. So definitely no movement into risk on for the week. Slightly worrying, but there you have it. What you really should do is all the time have a look at the deviations tabs and see where we are in that cycle. As you can see, everything is now contracting. This probably says that for the next few days we go sideways, more than few days, probably a few weeks, and possibly test this lower band, which by then will be quite a bit higher up, and that should provide us with a buying opportunity. But you should be looking at deviations each and every day. When markets are as hard as this, it's always good to go from the fundamental standpoint, and that is that support, natural support, is going to be around the 16 times Blue Angel. If we just zoom in, we can see that that comes in just below the level of 2800. So that is going to be your natural support, and if things really turn bad, you've got the support at 2620, 2625. But I cannot help but thinking that we are in that range, this just below 2800 to 2900, 2910, 2920, and that eventually we will break higher with the Blue Angels. But let us look into detail the week ahead. The 2-year note managed to close just 1 or 2 basis points above this all-important level at 218 that we tested once. It's not a convincing situation, is it? Because either we're going to have very strong risk on, in which case the 2-year note should go back to around 240, or the Fed is going to have to step in and ease, in which case you go all the way down to probably around these levels, around 145 to 150. It might take several months, but that would be your destination. So this picture is inconclusive, and I prefer to wait for a break, of a decisive break of the lows here around 214 to actually add to my 2-year note long. Simply because of the optionality of this trade. I could lose 20 basis points, or I could make 5 times that. I am basically inclined to give it the benefit of the doubt for the time being and still hold longs. Our bellwether for the dollar, which is the differential between the 10-year note and the bunds, is still firmly stuck in the middle. All week we've moved hardly a basis point. It is amazing how the central banks manage to keep this at bay. The volatility is almost next to nothing, and therefore no real trade with definitive, how shall I put it, with total conviction in the dollar. The dollar is moving up simply because people are preferring to hold it for safety, and also because of the carry. But I would really love to see, if to strongly favor the dollar and think that I'm going to make much more than 1% over the course of a month. I really want to see the 10-year note outperforming the bund, and breaking this downside around the 258 mark like it did here. No such luck, so my longs in DXY via options are just going to have to, I'm just going to have to hold them and hope for a slow move up. The Bund nearly got to our target at minus 16 basis points. Just 6 basis points shy. I think we get there over the course of the next couple of weeks. And my stance about 8 basis points. Any close above 8 basis points, and we are in a bear market for fixed income, with yields going up throughout the world. That is why I can't see it for the time being, and I'm quite happy to remain long of Bunds until they test this minus 16 basis point area that they tested a couple of times in the past. Just like the 2-year, which has not broken down, neither has the 5-year. If we enlarge this picture, you can see how important this 213 area is. It has touched it so many times. So until and unless equities start breaking down, I think it's going to be very hard for this market to break convincingly and stay below 213. Therefore, just like my fears in the 2-year, but I hold that because of optionality, I'm not holding 5 years or 10 years because I think the odds are higher that we go back up towards the 230 level than we are to break below 213. The 10-year note is not breaking, just like the 5s. We have this very important level here at 234. We are not managing it. Again, my preference would be for a move back up towards this 250 area, but that is only going to happen if we get decent stabilization in the equities, and I don't think we are likely to get that. We are likely just to meander for the time being, another week or two maybe, just frustrate the hell out of everyone, and then make a decisive move one way or the other. If we look at TLT, we can see how close we are to this very important 127.37 area. I think that is going to be very hard to break, but people are buying TLT simply because of the yield and the uncertainty that the equities are providing. TLT, this is a weekly chart, has not managed. As you can see, there's the gap for the week. It has not managed to close the gap, not even when equities close their gap at 28.90. Well, absolutely nothing from TLT. TLT is likely to stay in a range between 127.30 and possibly this low here around 124.80. Unless we get a break of those levels, I really cannot see much movement in TLT. The S&Ps, even on an hourly basis, are just managing to frustrate the hell out of everyone. The one thing that I do notice is that this 200-hour moving average is slowly turning. We have a very important level here at 28.95.96. We need to close above that level to have any impetus to go and fill these gaps that we have, and I will enlarge this. We have 3 gaps here around 28.20 plus, and finally up to 28.48. It's unlikely that we see that kind of movement in the next couple of days, simply because I just don't see this as a reversal pattern as yet. On a trading basis, I do prefer the test of this 2800 level. I think this is quite a weak low for the time being, and below, a test below, and also coinciding with the Blue Angels that I showed you earlier, I think that would provide a much better buying opportunity. But there we are, any close on a daily basis above 28.95, 96, and I guess you have to respect the price action and say that they've thrown the kitchen sink at it. It has not gone down. It is going up to at least this level to close the gap. On a daily chart, well, indecision, indecision, indecision. What to say of a market that after the whole week actually closes higher, but still below all the important moving averages. Here we are, we have this this level here at 28.69, and finally the last moving average of importance around the 2900 area, which is right where I showed you that very important level on the hourlies. It's a market which just cannot get any traction one way or the other. To me, it's a market that's more likely to give up ground on bad news. It would take something quite spectacular to make it break above 2900, but if it does, I think it's likely to go all the way up to 2950 and retest the high. So I will definitely respect this last line of resistance. I would prefer to see over the course of the next few days retests, breaks of this 2800 low, possibly trade as low as 70, 80, and then back up. On a weekly basis, well, here we are. We bounced off the first moving average, the weakest kind of support, and we didn't manage to touch the other moving averages. That is what I would like to see. I would like us to trade this 27.74, 75 level. We closed below 28.64. To me, this is another market which is basically it's going to another reason why it's going to test the downside, as opposed to just close strong and keep on going. Neither the transports nor the industrials are really giving us a clue here. I think both are more likely to retest the lower Bollinger Bands than actually go straight up from here, but that is just my trading preference for the next few days. I would definitely like to see these levels here around 10,180 to 10,160 tested and hold, and then I think we'll have cleared out all the bulls and we can probably make some headway. On the Dow Industrials, you know, we bounced rather nicely from these levels, which is 25,380. I think we retest it at some stage and then we see. This is a weekly chart of EEM, and there is not much doubt about who is winning the trade war at the moment. It's definitely Trump. This is basically where he tweeted, around 44. We missed my selling level 45.04 by ticks, and here we are going down towards the lower Bollinger Band on the weeklies. This is pretty damn significant, and we have this trend line which you know, you can see here how well it was respected. You can see here that every week during those massive swings in October, November and December, the market held it, apart from the last few days of December. I think we probably retest it, and that will be our first opportunity for a bounce. Here we are around the 39.40 area, 39.40, 39.50, and from there we should be able to bounce at least 3 or 4, 5%, which fundamentally what would that do? That would allow, first of all, ES to make possibly a new low, but it would also mean that the Chinese step in and start doing some serious QE, in which case the whole of the equity market gets a profound lift. And here is the most frustrating market of them all, and that is the dollar. I am long of it. I'm not going to go short of it unless as I've told you, we break the 96.50 area, this swing level. We've closed above every single level that I hold important, i.e. the last one was 97.87. We closed above it. The Bollinger Bands are expanding. My preference is that as people see things, the Chinese situation and the fact that Trump is winning the trade war, that more and more money eventually flows into the dollar, and that we trade this 99.79 level. That is my first target in the DXY. Another reason why I think that we might have a little bit of risk off is XLP XLY. This just wants new highs around here, doesn't it? Just for the sake of it. Excuse me. So that is why I'm leaning on shorts on a trading basis. But I think that those levels that I showed you earlier, just below 2800, will hold, and those will provide much better buying opportunities. The DAX is trading very well relatively to everything else. It's just too simple that it keeps on going. I think it's more likely to do a fake and take out the lows just by a few ticks and then go again. Overall, the DAX is probably trading one of the best that I can see. You can see how important this level here is at around 12,400, and that is the level that I've been 12,440, 450, and that's what I told you, that it had reached the 0.618 retracement. It would be normal for it to do an ABC and bounce off this kind of level, 11,750, 11,800. That would definitely be a decent buying opportunity, just the same as in ES, and the two might actually match up together there. As to the biases for next week, unfortunately not a lot has changed. I've moved these levels a couple of basis points. It's now 213, 235, 236, 250. Still, the really important level to me is the 2-year note, because if the 2-year note starts closing below 217, you can bet your bottom dollar that something is up and the Fed is going to come in and ease and come to the rescue of the equity market if that starts melting down. Bunds and bubble, bunds are minus 16 is the target. That is where I exit all positions, and 0.8, as I keep on telling you, is the magic level. Above 8 basis points and something very important is happening. As far as the S&Ps, a closing break above 28.96 is to be respected, but we have closed below 28.64. To me, it's more likely to range down to 2800, 27.75, stop everybody out and then go again. But again, I will respect a closing break of 28.96. The NQ, I just don't like it. I just don't like the way it trades. It trades heavy most of the time, and then it has a couple of hours of ridiculous spurts of 100 points. I always try to fade them. I just don't feel uncomfortable fading NQ for the time being. It just trades a lot worse than ES to my mind. The RUT, nothing to see here. It's just weak and to be avoided for the time being. I will find some more buying levels, but for the time being, nothing there really. Nothing else has really changed. I think that 19 level in volatility is going to be very important. Trump tweets and it jumps up there, but it fades very, very quickly. To me, DXY, we've had this closing break of 97.87. You have to be long it, and with the benefit of the doubt. I showed you that the target is way into the 99s. And we have our strategy for the downside, which is the 96.50 level, where you turn the long calls into long straddles, because one of the two is going to make quite a bit of money. But you have to give it the benefit of the doubt for the time being. I like the way it closed above 97.87, and I'm going to stick with it. Thank you very much indeed, and tweet you on Monday.